Across public sector development portfolios, performance is usually measured by a single metric: fund utilization. We track how much of the allocated budget has been spent. But fund utilization conflates financial disbursement with physical delivery. It assumes that a dollar spent equals a dollar of progress, creating an illusion of momentum. A project reporting an 80% expenditure rate appears to be nearing the finish line. In reality, it may only have completed 40% of its actual physical scope. Relying on expenditure data alone triggers three systemic failures. It distorts cash flow projections for medium-term development frameworks, makes it impossible to verify if the government is getting value for money, and removes the early warning system for delivery failure. To transition from administratively monitoring spending to actually managing the physical delivery of projects, we have to adopt earned value management. We will examine how a parametric estimation framework bypasses traditional technical hurdles to extract multidimensional intelligence directly from existing SMDP project data. Moving past the utilization illusion provides the structural basis planners need to determine if they are receiving the physical assets they are paying for. Earned value management is the internationally recognized standard for measuring project performance. It is the operational framework adopted by the UK Infrastructure and Projects Authority and the United States government to integrate scope, schedule, and cost. At its core, EVM compares three specific quantities at any given point in a project's life: planned value, earned value, and actual cost. This visual represents those three pillars. Planned value is the budgeted cost of work scheduled to be completed by today. Earned value is the physical progress actually completed, expressed in financial terms. Actual cost is the real expenditure incurred to achieve that progress. Historically, a specific technical requirement has prevented public sector portfolios from adopting this standard: the dependency on resource-loaded schedules. Traditional EVM requires maintaining detailed activity networks. Every single task needs assigned costs, durations, and dependencies, demanding technical capacity rarely available across provincial departments. Achieving true portfolio intelligence requires a system that bypasses this technical capability gap. The EVM Portfolio Analytics Tool resolves this by using parametric estimation to derive planned value and earned value directly from standard project data. For planned value, charting time against expenditure isn't a straight linear path. In reality, infrastructure projects follow an S-shaped profile: slow mobilization, rapid middle acceleration, and tapering completion. Configuring alpha and beta parameters models front-loaded early procurement or back-loaded late-stage major works. Deriving earned value requires a different estimation method. We have to convert nominal funds spent into a proxy for the physical work completed. The system calculates this by applying a configurable inflation adjustment to the actual expenditure. This generates a present value equivalent that aligns with public investment time value of money principles. These two parametric models synthesize a defensible EVM baseline for every active project without requiring a single activity-level schedule. Once the parametric engine establishes the actual cost, planned value, and earned value, it translates them into actionable indices. The Cost Performance Index, CPI, represents value for money, calculated by dividing earned value by actual cost. The Schedule Performance Index, SPI, measures delivery against time, calculated by dividing earned value by planned value. The interpretation of these metrics is direct. Any value above 1.0 indicates favorable performance. Any index dropping below 1.0 indicates the need for intervention. The engine also projects future impact by using the current CPI to calculate the estimate at completion. The estimate at completion gives planners a performance-adjusted forecast of the final project cost, derived from the actual delivery efficiency demonstrated so far. These specific indices provide the early warning system for schedule delays and budget overruns that basic utilization tracking misses. At the macro level, individual project metrics are weighted by size and priority to form aggregated indices for the entire provincial portfolio. This dashboard maps every active project onto a 4-quadrant scatter plot of CPI versus SPI. Planners can assess overall portfolio health and locate underperforming clusters. But cost and schedule efficiency alone do not guarantee a project is valuable. The tool introduces a secondary analytical dimension, assessing strategic fit. An integrated AI classification layer scans project titles and descriptions, eliminating the need for manual, subjective data entry. The AI assigns specific sustainable development goal tags and strategic alignment scores to every active project based on provincial development priorities. Applying this automated taxonomy transforms portfolio rationalization from an opaque negotiation into a transparent, evidence-based process. This chart illustrates a central constraint in public sector planning. The total demand for projects inevitably exceeds the available funding ceiling. To resolve this budget constraint, the tool deploys linear optimization algorithms. The algorithm identifies the combination of projects that maximizes strategic impact while keeping the overall budget under the approved ceiling. This optimized selection feeds into the medium-term development framework forecasting module for multi-year planning. Historically, multi-year projections rely on the optimistic baseline assumptions of initial planning documents. The EVM engine replaces those assumptions with data-driven completion timelines. By projecting the historical CPI and SPI trends forward for every single project, it calculates a multi-year expenditure profile. Running portfolio optimization under hard constraints, combined with performance-adjusted forecasting, provides the foundation required for fiscal space analysis. Applying this advanced analytical framework does not require dismantling the administrative systems currently running the provincial government. The EVM Portfolio Analytics Tool is built to integrate with the existing SMDP monitoring platform. As this schematic outlines, it operates as an advanced analytics layer. The basic data points already captured, approved budget, planned dates, and actual expenditures flow directly into the EVM engine. A standard CSV export from the existing system generates the complex portfolio dashboards. No specialist EVM training is required from the end user. Parametric EVM closes the capability gap. It enables public investment management to look past total expenditure and produce defensible estimates of what has been delivered,